Welcome to the April edition of my market diaries in 2023. If you didn't join us last time, please go watch that last video so you understand what my rules are. But the important things for this month were to get my dividends to 3.5% annualized and to be invested in 4 to 5 industries. Now, I did invest in 2 new stocks. Those would be Ares Capital and Charles Schwab. I threw some money in on the very end of March, beginning of April, and really, Ares is the dividend stock that I've been looking for to get me over the hump, and Schwab, it's a good bank that got hit by the banking crisis that's been going on. I don't know if you've heard, but there were a couple of bank runs, a couple of banks went, out of business, got bought up, I don't need to rehash the absolute turmoil that losing 3 major banks has had on the industry in the last month. So I decided to go in on Schwab because its stock got hammered and I think it's a good bank. I'll talk more about that later, but anyways, I did buy 150 shares of Ares at $17.96 average, and I did buy 10 shares of Schwab averaging 49.48. Now, if you want to look at my actual portfolio allocation at the end of all of those buyings, you can see that I did get to a 3.72 annualized dividend yield and about $1,300 in dividends expected per year. That's about $325 per quarter. Now, if you'll pardon my pun, why did I decide to go in on Arc Capital? Well, I really liked the fact that it was a fairly stable stock that even in the height of the last banking crisis and the height of the pandemic, their stock pretty much stayed stable around $17. I also like the fact that their dividend pretty much stayed right around 45 to 50 cents through the best of times and through the worst of times. So right now you can see their yield's 10.54%, 48 dividend. I really liked it. Low beta, its 52-week range isn't too bad, and it's not a heavily shorted company, so I'm not too unhappy with where it's at. Now, if you'll pardon my other pun, if we're banking on a turnaround for Schwab, I'm kind of really just like, all right, this was a bit aggressive of a sell-off. You saw one here, you saw one here. Kind of the trend line's taking it back up to 60. So that's pretty much what I'm looking at. I'm gambling. So sue me. I'm going to sell this around 60. If I get a couple of dividends out of it, great. It is, doing a 2% yield, 25% dividend, 25-cent dividend. It's not awful. It's not great. But I'm really just going in this to sell it when it hits 60 at, 10 shares. It's, $100-ish. So anyways, this is the actual way it went down. On the 4th, I bought 4 shares in the 18s. I thought that was a little bit high, so I didn't really want to buy much more than these 6 shares. And then on the 5th, I put in a call order. I put in a limit order for $17.95. It did end up filling all of those at that $17.95 price point. And Schwab, I just put 2 in on that first day for, I think I just put in a market order for those ones. And then the next day I put in an order for 49 at a limit order, and it filled at that 49 price point. All of our old friends are doing well too. Walmart did fairly well, up $305, and actually paid out a dividend. I didn't realize I made the DivX date, but I did, so I did get a dividend at the very beginning of April. Exxon was doing really well, was at $1,300 up. It kind of peaked at 118. Don't ask me about how it did the week after, but at one point that was at $1,300, so it was doing well. Same for Microsoft, up to about $1,200 from where I bought it at. It was at $308 at the end of the month. Microsoft has been doing fairly well. That Activision deal following through and AI continuing to get market share from Bing. Very happy with Microsoft at the moment. Amazon, kind of fluttering, but, 105 isn't a bad price point for it. Month over month, it's up like $2. And Enbridge, again, wasn't expecting much, but it's at $39 right now, whereas I bought it at 36, so 37 average. You can see right here, 37 average. It's up almost $450. But again, this is a dividend stock. I wasn't really planning on this being a big breadwinner. I was very happy when I saw it hit 39. So how did the new guys do? So the cost of buying the new positions, the 160 odd shares, that was about $3,200. The value at the end of the month was about $3,300, and the net profit was $105. This doesn't last. I'm going to be very clear. May has not been nice so far, but in April, that first month of holding, it didn't do too bad. How did the old guys do? Well, at the beginning of the month, I was worth about 33.8. At the end of the month, it was worth about 35.6. So the profit month over month was about $1,800, but the profit since open was about $3,800. Again, May has not been kind. This did not last. So total end of month results, the net value of my portfolio is about $39,000. The net paper profit was about $4,000, and the projected dividends is about $325. So that leads us into another question, which is, why am I doing all this? Well, what's my reinvestment math look like? And that's really the crux of what I want to show in this month's diary. So that 324, if I can buy ARC Capital at 1775, which is about the average of which it's been kind of fluctuating between since its inception, gets me about 18.3 shares every quarter. Well, 18 times 48 means I can get an additional $8.64 every quarter just from reinvesting my dividends in from this initial one, which means every 2 quarters I can buy one additional stock over the 18. So I can buy about 19 every half. Well, if we look at this snowball, well, my initial 150 shares gets me about 288. Every, 19 shares gets me about $36 of additional dividends. So every half, I'm adding 37-ish shares. That's an additional $71 per year, or $18 per quarter, or $18 per half, I should say, which, if you don't know, 1776, that's the price I'm buying these shares at. That's another share on top of it. So 1 year, let's say we can get 74, 75 shares. You're looking at an additional, $35 dividends per quarter. But, you're also looking at, investing about $1,300 in, and that's all just reinvestment. Well, if you take that 1 year 74 added to the 150, you get a new value of 224 shares at about $4,000. That gives you $100 of quarterly dividends, or $430 of annual dividends, and that's just from reinvesting. Now, let's say we get it all the way up to 504. That's just taking the total of all this. I'm not saying, this is sometime in the future. This comes out to be, about 3 to 4 years of reinvesting dividends. You get to about $500. That's $1,000 of annual dividends on its own, and quarterly about 245 dividends. So in 2 to 3 years of reinvesting, you're already pulling almost the amount that, all my dividends currently are getting me in a year, which is why ARC is becoming my dividend dump stock for the foreseeable future, because that snowballing effect, that 10% isn't nothing. 10% of guaranteed yield, and a history of doing that yield is very, very important to my current financial thesis. So, what's my plan for May? I'm going to actually hold all the stocks that I had, including Schwab. I'm not going to sell anything this month. I'm actually going to listen to the earnings calls that are coming out, and I have been listening to the earnings calls. I might put out a couple of videos thinking about what exactly it is that all these companies are doing. I actually just listened to the ARC earnings call just before making this video, and I'm very happy with what their earnings said, and it makes me a lot more comfortable being in a mid-cap business lending corporation in the middle of a liquidity crisis because our capital is, it lends money to, mid-range businesses, not small businesses, but not large cap businesses either. And it has a large, diverse set of, I think, 60 something businesses that they hold. And I was happy with how they were planning to go through the current banking and liquidity crisis. And anyways, I'm going to look for crashes because, quite honestly, if any of these stocks really have a crash, like Exxon had a huge crash and it almost made it worth reinvesting some additional money into, but it didn't quite hit the level that I needed to hit to actually pull the trigger on buying more. So I'm going to continue to watch for crashes, but nothing has crashed so much that it was worth buying, but it just kind of ate into, the paper profits that we talk about every week. But because I'm not selling, paper profits mean nothing until you actually sell, and I'm not taking anything off the top. So that's my plan for May. It's really just to do some due diligence and to really show you guys some of the due diligence, and that's going to be the May diary if I have anything to say about it. Anyways, these are my disclaimers. Thank you very much for watching. Please feel free to comment any questions you have. I'm happy to answer them. And if you found this useful, please give it a like. And as always, I am thankful if you are willing to subscribe for future content like this. Thank you very much for watching again, and have a great month. Bye.